Hey, big warm welcome back here once again. Ladies and gents, 12 o'clock Eastern time here. It's a Wednesday morning. Another sloppy day here in that transitional week between the end of the first quarter and the Easter weekend, Good Friday, non-farm payrolls on this Friday. We've been talking about this for a couple of weeks now. The end of the first quarter, you've got taxes due, you've got New Year's resolutions are in the trash can, you've got kids on spring break. You have all kinds of distractions right now, not to mention the fact that we've got a long weekend coming up here this weekend. Got Good Friday on Friday. We got Easter Sunday. So Thursday, Friday, and Monday, our trade room is closed this week. But we've been talking about this for a couple of weeks now. This time of the year is challenging, and specifically this week we know is kind of that tease, right? We're out of the first quarter. We're through the quad witching in March. Okay, we get into April and we go, we're here, right? We should be better now, right? And it's that 1 week. It's almost like the first week of September. You know how the first week of September is actually, what is it? Labor Day, Memorial Day, something like that. What is it? I always forget that darn holiday in September. But we all know the last week in August is when every European trader that I know goes on vacation. I know because they come to see me in Los Angeles. Labor Day. Is it Labor Day? Labor Day? Okay. So last week of March, end of the first quarter, we're thinking, oh, we're finally out of this in April. Not yet. Non-farm payrolls, first week of April is a real short week here. It always is. Very similar to that last week of August, when we can just feel the summertime's coming to an end, the official kickoff or the official completion of the summertime is over, and we get into the first week of September and we go, oh, we're ready for the fall, right? And no, not yet. We still got to get through that first week of September. So this is very similar to that. We're so close, we can taste it. And today was another day when we wanted to come in, do our job correctly. And my job this morning was to find those high percentage trades. Like we do every morning, we put together a plan of attack. We look at each one of our charts. We find our price structures. The price structures tell us exactly what to do. Then we wait for price to come to us. Now, we don't see this happen very often in this trade room, but it happened this morning. Took a couple first trade losses here and got myself into a pretty decent hole there first thing this morning. Now, before we go talking about these trades we took this morning, I do want to remind everyone, guys, please be careful with the risk capital. As a member of mine, I'll provide you with a trading plan. I'll provide you with all the specifics that you need to do, how to do them, when to do them, where to do them, when to do nothing at all, right? Okay? So I'm going to give you that list, that grocery list, that shopping list you need to go to the market every day. And we talked about the power, really the benefits of a trading plan today. And that trading plan that I provide to my members, the trading plan that I use is very, very powerful, because good example this morning, I got my day started, took a couple, well, the first trade wasn't a bad idea, but the re-entry was definitely not a good idea. It wasn't a good idea at all. So what happened was I got in on not a bad trade in the first one and took a loss on it. But then I compounded that loss by not following my own advice and waiting for better market personality. Okay, so we got the day off to a little bit of a good start on crude oil, and then the euro was sitting there, and I got two easy losses. And the reason why I talk about the power of a trading plan is because under normal situations, most traders would say, okay, I got to give up right now, or they'll revenge trade, they'll start aggressively trading now, and they'll dig themselves into an even worse hole. At least that's what I did when I first began doing this. When I first began doing this, I made it a habit, right, to dig myself in deeper holes. You would have thought that was my job as a trader when I was a new trader. So I get myself into a hole. But if you were with us this morning, what did you hear me say? What was the reasons for the trades, right? I wasn't following my plan. My plan was, what direction are those trades right now? They're both long, right? Well, we got a clue from the dollar, and the dollar told us to be looking short. And on top of that, we had very sleepy dollar personality. So the first trade was called higher risk. And took a loss. Oh well, no big deal. Second trade, impulse trade. Second trade, bad idea. Second trade, wish I could have back. Most importantly though, after I took that second trade, what did I talk about? I said, okay, now why did I take those, right? Why did those trades fail? Why did I take them? How can I avoid this now? And I said, well, I wasn't following my plan. I wasn't staying consistent with my plan. The plan that made me so much money yesterday, day before that, I ignored it.